Assalamu Alaikum everyone, welcome back to the channel. We have a lot to jump into in this video. First, we look at the current situation in the stock market. Then we will take a closer look at one of my favorite dividend stocks. Then we will check out my favorite technology company that we have spoken about so many times in the last 6 months. I want to see how the company has performed, and that is one of the things that we're going to finish off. So if you are interested in this, if you've been with me for a while and you're interested to see what happens to some of the stocks that we've spoken about, stay till the end. Hopefully we can go through it and I can show you basically how the company has performed. This is one of the companies that I have done numerous videos, and I want to share that with you and see where, sometimes we talk about loads of different stocks, but we never actually look back and see if some of the things, some of the predictions that we made actually materialized, or even just kind of gone back, or whatever happened to the company. So I'll give you a quick update on that, and that's what we're going to do first. But first, before we start doing that, I want to share with you what's going on in the stock market right now. So in the last basically 5 days, the stock market is up about 1%. When you see this, and you realize basically what the news was like on Monday, if you have no idea what happened on Monday, I will show you very quickly. And this is what I'm talking about. So when the Dow Jones, which is basically consists of the S&P 500 and Dow Jones, both of them were actually down. The Dow Jones only has 30 biggest companies, 30 mature companies, and the S&P 500 has the 500 biggest companies in the US market. So they were both down on Monday. And when you watch the news and you read this on Monday, you will think this is probably the worst thing that have happened to the stock market, and we are going to crash, and everything is just going to be doom and gloom, and there's no way out. But then when you look the next 4 days, it recovered, and by the end of Friday, the stock market, or the S&P 500, was up almost 1.2%. In the last month, it's down for this month. However, when you look at the 6 months, okay, it's up almost 14%. A year to date is up 20%. So when you see a down days, like the one that I've just shown you here, and people start panicking and start selling, and then the following 2-3 days, the stock market even goes higher. So if we just look at this week, the only companies that were in the red were companies that either had a very bad news, or they reported their earnings, okay, like for example Nike, Adobe, and a couple of other companies. They've reported their earnings and it wasn't maybe great, or whatever reason, they went down. But majority of the stocks were up maybe 3%, 4%, 5%. And this is the reason why I always talk about, ignoring the noise and focusing on your own goals and what you want to achieve. There were a couple of stocks that I owned, that went down just that couple of days ago, or last week, Monday. I wasn't panicking. I wasn't worried about what's going to happen to my overall portfolio. Okay, is up still, but if I look at the week, for example, is actually was the beginning of the week, it was about almost £32,000, but at the end of this week it's now, and I've added a couple of, obviously I've topped up because I bought a couple of more new shares, and I'll share that with you in a second. But to be honest, I wasn't panicking at all. I knew there's my goals and what I wanted to do. So I start looking around and see if there's any undervalued companies right now in the market that I'm interested in buying more, and that's exactly what I did. So if you go to my Instagram account, so if you click the link on the Instagram, this account, right, you will see I was actually buying more stocks on that day, and I was adding to the shares of some of the companies that I own. So just to kind of give you a heads up, just when you see down days like the what we saw last week, okay, just don't panic. Okay, don't panic sell whatever you own. So the stock market will go up, will go down, but eventually, if you know what you're doing and you have a plan and you are investing like I am, if you are investing in blue chip companies, right, companies that basically have a moat, companies that have a free cash flow, companies that have been around for a long time, probably paying dividend companies, and they are mature companies, then you have nothing to worry about. So when, for example, Broadcom goes down about 5-10%, okay, and it is now gone down to a value that you wanted, okay, then maybe it's a good time to buy. All right, so if it goes down to basically stock, one of the stocks that you own goes down. So imagine if West basically one management actually goes down, and I say 10%. Honestly, I would not be panicking. I would be really happy to buy more, because as you can see, my price alert is $140 per share. Currently is $154 per share. My average is $114 per share. So $112 per share. So you can see I will be happy to buy more in the dip, and obviously that's what I did on Monday when the market was actually down to whatever 2%, 3%, whatever it was on that day. So that's just basically just want to give you a quick update. So when you see days like this or months like this or whatever, just don't panic. Okay, as you can see, the stock Microsoft is up for the last 3 months, is up about 13%. Apple is up, Google is up, all the big companies will be up. Okay, there might be 1 or 2 companies that are down. So for example, Amgen, which I'm actually basically looking into right now, is one of the stocks that I own, is down about 12%, okay, in the last 3 months. All right, so I'm not panicking, I'm buying more, and I bought more on the day when it actually went down. So if you go to my Instagram, you will see that definitely. So right, so the stock that we're going to talk about in today's video is a company called Union Pacific. Union Pacific is one of my holdings, and I'll share that with you in a second. The Union Pacific Corporation basically is a railroad company. It engages in the railroad business in the United States only. They are involved in all types of transportation services to other companies. So when basically the economy is doing really well and people are buying loads of different goods and they needed that transported from A to B, this company does absolutely brilliant. When the economy isn't doing well and a lot of companies maybe or people are not buying certain things and whatever, they don't need any shipment or whatever, okay, then they don't perform as well. So they are quite, in terms of depending on the economy, they do well if the economy is doing well. If the economy is not doing well, they actually do not perform as well. And because recently Joe Biden actually announced the infrastructure bill, there are a lot of constructions will take place in the next couple of years, and this is one of the reasons why I am actually quite bullish on this company. Not only because of the infrastructure bill, but because I know they will benefit when everything goes back to normal. Because as you know, obviously the markets in terms of the economy has been slowed down because of COVID. Now once everything is reopened, everything goes back to normal, this company will actually benefit a lot from that. Now we're going to dig deeper into the financials, so have a look at the company and basically how they're performing at the moment. So when you look at their income statement, so this is their revenue, this is the money they've made from selling the product or their services. So the last 5 years or 4 years, if you look at, it's kind of stayed the same. So it went up a little bit there and then it came back down. So 21.7 from 22.8. But then 2020, because of COVID, it actually went down to 19.5, and now it's kind of rebounding. So it's actually getting back to where it was before this. And then when you look at the gross profit from the last 4 years, you can see it's actually basically heading the right direction, apart from 2020 when things were not actually great because of COVID. But it looks like it's actually going to rebound and it can go back to the way things were before. And when you look at their net income, okay, from 10 billion to 5.9 billion. So I think they must have sold something. 2017 something definitely happened. They must have sold a part of their company or something like that, because revenue went up about 10.7, then it went back down. So this is more realistic. This is what we kind of expected from this company. So I'm assuming something happened to the company, or they've made it, basically they sold something that year. So it will be interesting to look into that definitely. The next thing we're going to look at is the balance sheet. So the balance sheet is where you will know if the company has enough money to pay off their debt, like a current debt, which is basically against their current assets. So current assets of $4.2 billion. It's been consistently kind of going up, which is nice, apart from 2019. And then when you look at their current liabilities, okay, that's about 4.1 against 4.2. So they have enough cash or enough money or enough assets, if you like, to actually pay off that as well. Basically when it comes to shares issued, they've kind of basically consistent. It just went up a little bit, but in 2019, but that's fractional. So they're not diluting as much. The reason we should look at the shares issues is because you don't want the company to actually issue more shares, because what happens to your one share is all of a sudden worth less than what it was before. But if the company is buying back their shares, then that's a good thing, because your value of your shares will go up in the long term. Right, so cash flow again at the moment is $5.8 billion, and that covers obviously the dividends, which is, if we look at their dividends at the moment, okay, is 2.1%. They pay you about $4.28 for every share that you own, and per share right now they're paying about above just $1. Payout ratio, so this is a month of basically their net income. Out of their net income, they're using about 43% of that net income to pay us the dividends. Okay, 5-year growth rate of 13, which is absolutely brilliant. That's one of the fastest growing I've seen. And then dividend growth, consecutively they've been growing this dividend for 14 years. I'm not sure how accurate this is, because I thought this company is a dividend aristocrat, but apparently they've only been doing this for 14 years. Dividend aristocrats are companies that have paid the dividend 25 years or more. So right now we're going to look at the analysis side of things. So what the analysts have said so far in terms of growth for this company for the next couple of years. So growth estimate for the current year is about 22%, which is really good. Next year about half of that, so 12%, about half of it. And then next 5 years about 14%. So it's really good. So current year of 22%, then 12 for next year, and then basically the next 5 years per annum you're looking about 14% growth rate. Now again, this is what the analysts are predicting. It might happen, it might not happen. When it comes to recommendations in terms of whether the stock is overvalued and undervalued, when you look at the buy or hold, it's actually a buy at the moment, as you can see. So 2, so basically we've got 7 people that said it's a buy, 5 that said a strong buy, okay, and that because of that is actually now a buy here. When you look at the price and basically price range, you're looking at low of 205, average of 246, and then high of 265. Morningstar is slightly different. Okay, so last close was $203 per share. Currently, basically what they're expecting is a fair value of $183. And then when you look at the tip ranks, for example, they are saying 246 is the average price. So the highs will be 265, lows of 246, and then average of 246 and lows of $205 per share. Finally, we're going to look at the Simply Wall Street. So at the moment they're saying 211, which is about 3.6 undervalued at the moment. So the company looks to me, even though the Morningstar is saying this, Morningstar is always, they probably look at the companies in, I think they include some sort of a margin of safety, which is really good. Okay, I like their analysis because that kind of gives me a balance, because some of these companies, other companies might basically analyze and say, okay, it's going to be 240, 260, but just, some of these analysts, so you can't really always trust them. So you have to just look at the other different basically websites to get a kind of rough idea. So but when you look at the tip rank, for example, all these people that come basically work for different companies, right, and every single one of them, majority of them basically have said it's going to be higher. Some of them, even they say the hold, okay, is higher than what they've predicted. 3 months ago the stock was basically slightly over 230 something, so therefore that's reason why they say it's hold. But since then it's gone down quite a bit. So at the moment every single analyst has some sort of upside to their predictions, which is good to see. So if you've got the basic shares in this company, then it may be a good time to actually add to it. If you don't have any, then you might actually have to maybe initiate a new one. I'm not actually giving you financial advice. I'm just saying, if you're interested, this is really one of the good companies out there that has a growth potential as well. Final thing I want to show you is about Union Pacific is the dividend safety. So we already looked at basically the fact that they pay you about 2% dividend, but if you look at their dividend safety, according to this website, it is very, very safe, which is a very good thing to see. Final thing I'm going to show you is my holding. So I have got 12 shares of this company, and let me quickly show you. I think I bought a few more shares in the last couple of days because it went down. So I actually, on the 14th, which I think it was the Monday, I bought £255 worth of shares on that day. Before then, I actually, September the 3rd, I bought £776 worth of shares of this company, 250, and then I bought another £41 worth of shares in basically on the 20th. So since September, I actually spent over £1,000 in just buying more stocks in this company. And as you can see, my dividend has actually been about, I've got, at the time when I had about 5 stocks, okay, 5 shares, they paid me about £3.29. So currently own basically 12 shares of this company. I am happy with it. I'm down a little bit, about 3%, but obviously if what the analysts are saying is actually true, is going to go up, and I'm not worried about it. If it goes down more, I will definitely be buying more. And at the moment, I think it's just became one of my biggest holdings, because if you look at, there we go, it's over 5% at the moment. Okay, it's actually bigger than Home Depot and Procter & Gamble, Kimberly-Clark, and all the other companies that I own in my portfolio. Right, so now the update. One of the stocks that I own in my portfolio, and I've been talking about it for a very long time, is this company called Salesforce. I've done quite a few videos on Salesforce, and I've always said this stock is definitely undervalued, and I've talked about it so many times. And I want to show you what happened to the company just in the last couple of weeks. Right, when you look at the just the last couple of days, so if you look at Salesforce just yesterday, which was Friday, basically went up almost 3%. Last 5 days, about 11%. Just the last 5 days, just this week. For the month is about 9%. For the year, it's about the last 6 months is 39. And year to date, it went up 29%. So in the last 6 months, I've been talking about this company, and the fact that it's actually way undervalued. They came out a couple of days ago, and then they actually, they're basically, when it comes to their revenue forecast, they actually gave more optimistic in terms of profit-wise. Basically evaluation of their overall profit. So initially they were expecting something, and then all of a sudden they said, nope, we're expecting actually a lot more than what we expected. So this says here, January will be high as 26.35 billion, up from previous prediction of 26.3. So it's actually not a lot, but because of that, because of what they came up with, and the fact that they actually think now Slack, which is one of the companies they own, will actually generate more profit than they actually initially thought, they have actually said, now we're gonna, basically looks like we're gonna make more money than we actually, more profit, than we actually anticipated at the beginning. And because of that, it actually, the stock really jumped. So I don't know how many, let me actually quickly see. I don't even know how much I'm up. So I'm up actually 24% just on this. Okay, I've got another 5 shares in the Freetrade account. So in total, I actually have 8 shares of this company. This was a situation where I actually say to myself, I wish I bought more, but I'm sure there will be other opportunities to buy this company, because when you look at Salesforce in Morningstar, which is they give you a very harsh kind of overvalue, to be honest, overview, when you look at it, it's $312 per share. That's what they're expecting to be the fair value, and currently about 285. So it still have a lot more upside, as well as obviously the fact that the stock just went up crazy in the last 5 days because of what the company actually said. And this is the reason why I always try to say to people, just don't buy stocks just because they went up, because they down, whatever. Just focus on your goals and what you want to achieve. I know this company are going to be around for a long time. I think they will be as big as Microsoft probably in about 5 to 10 years from now. Okay. And if that happens, that will be great. If that doesn't happen, and obviously things do not work out, you can always sell it. But the most important thing is that whatever you say, whatever you're doing, just believe in yourself and make sure you stick with your own analysis. Now, the other final thing I want to show you is the price range for Union Pacific. Just going back to that in Union Pacific, right? So imagine if you bought this stock about 5 years ago. So you bought it 2016, when the price was $97 per share, you would have doubled your money. And this is really important to me and everybody that's actually like a value investors, a long-term investors, because it's not about how amazing, how the company, how sexy the company is, or whatever these days, whatever terminologies they use these days, right? It's more to do with, have you got a plan, and are you going to stick around with this company for maybe next 5 years? And if that is the case, this is what could happen. A Pacific, a railroad company that is not, it's really boring business if you think about it, right? All they do is transport goods from A to B. There's nothing, exciting about this company. But for the last 5 years, they went up 116%. So if you bought it in 2016 for $97 per share, right now you'll be selling it. If you wanted to sell it, basically you would have doubled your money in 5 years. And this is basically why this is so important. Let me show you another thing, MS. Let me show you Microsoft, right? The same thing. They're completely two different companies, but the last 5 years, if you look at the Microsoft, 2016, it was $57 per share. Right now, you would have made 421%, so up about 421%. Can you see that? So this is why I always say, when you're buying a stock, you're not buying it because you want to hold it for 1 year or 2 years. You're looking at maybe 5 to 10 years horizon, especially if you are young, if you are in mid-20s, mid-30s, okay, and you've got time on your side, then definitely go for that, just to think about the long-term plan, okay? This video is longer than what I wanted, but I hope it kind of gave you some value and understand the companies that I'm investing, why I'm investing in these blue chip dividend paying companies, and why, my philosophy when it comes to stock markets and crashes and all that stuff. It's really, really important that you have a plan. Stick with whatever your plan is, and just make sure that you invest every single month, every single week. Let me quickly show you one final thing, right? If I can find it. Every single week, I actually add more. I actually let me show you my transactions. Okay, so just this on the 20s, £200, £200, £25, 250 something pounds. Just this is all that's in September. So 200, 250, 25, 200, and then £200. This is money coming from my salary. I don't have anything else. Okay, that is basically what I'm getting. So whenever I get paid, I put money aside every single month for the stock market, and that is what I'm doing. So I hope I've been transparent enough to kind of show you what's possible. I haven't inherited anything from my parents or anything like that, and I'm trying to build this dividend to about 1,000 a year. So right now I have been given £520 in dividend. That's money that's been paid. I've got realized gains of deposit and realized gains of almost 2,700, which is then reinvested back into the stock market. So I hope you find some value in this video. Take care. InshaAllah, we'll speak to you soon. Assalamu Alaikum.